I'm Brett Sheedy. I'm a CPA and tax attorney with Strategic Tax and Accounting. Welcome to our knowledge sharing videos. In these videos, we'll cover some of our most commonly asked questions about how to reduce taxes, business law, and business consulting.
In this video, we're going to look at record keeping for newly self-employed or 1099 contractors and small business owners. So how do you do record keeping? It's important that you have a separate business account for your business activity. This way you can keep all the income and expenses in one place. This is going to help you from month to month to figure out if you're making money or losing money. It's also going to help you at tax filing season. So it's urgent that you keep separate accounts for business and personal activities. As far as receipts go, once you're using a separate business account for the business activities, it becomes less important that you keep a bunch of receipts. Also, a lot of receipts you get these days by email or other electronic manner. So you don't need to keep a bunch of physical receipts. The only thing you would need to keep a physical receipt for is something you paid in cash. Very little is bought these days with cash. So that rule of thumb you hear passed down from accountants and parents about be sure to keep your receipts is more from a day when a lot of things were purchased in cash. But it is important that you keep any receipts that you pay in cash. Also, if you bought something at a store that's both business and personal in the same transaction, but we'll talk about that in a second, you would need that receipt. Also, you don't need physical receipts. So you can take a picture of any physical receipts for cash sales that you purchases that you do need to use, or you can keep email receipts. You can put them all into a computer file or a Dropbox or some kind of bookkeeping software. You don't need to print those out and keep physical receipts. So back on the business versus personal account, it's important that you use discipline in using both those accounts separately. Don't commingle money or commingle transactions between those accounts. For instance, if you are going to Office Max or the equipment store, if you're in some kind of contracting, and you get to the register and realize you don't have enough money in a business account to purchase what you are about to buy, just take a minute to open your app or your online banking and transfer the money into the account that would be the proper place to spend it. With all business forms other than a C corporation, they're all pass through, meaning you don't have tax just by taking money out of the account or putting money into the account. So don't worry about that. It's more important that you worry about that you spend the money out of the right account. So again, if you're at the register, you don't have money in the business account, transfer the money from your personal to your business and spend it out of the proper account, and vice versa. If you realize you don't have the money to make your kids' tuition payment this month in your personal account, transfer it from the from the business to your personal account and spend it out of the right account. You'll really appreciate at year end that you've used that discipline as the year went along to make sure you kept personal transactions out of your business account and vice versa. So if you did use a separate business account and you use that discipline, it opens up how can you summarize your expenses for year end. You can have someone else do it. So it's a question of time, money versus patience. Which do you have more of? If your business is going well and you can pay someone to summarize this, the only way they're going to be able to do that is if you used a business account. There's going to be nobody but you that can go through all your personal expenses on one credit card or in one bank account and decide what was business. That is not a fun task, especially a year later. If it's because you're going to be, if you were doing business in January and then the next January you're trying to summarize the whole year's information for taxes, it's going to be very hard to summarize if it's all in one account, and you can't pay someone else to adequately do it. So another reason to keep a separate account. Then, if things are going well and you can afford to pay someone else, or numbers just aren't your thing, you can pay an accounting firm to do it. That's going to be probably the most reliable and accurate and accounting terms place to have your books created. You can do it as the year goes on. So they send you a profit and loss statement. You can see how things are going as the year goes on. or if it's not too big of a business, you can do it at year end. You can also use a bookkeeper who's maybe not at a professional CPA firm. Probably going to be a little bit cheaper, but they may not know some answers to some questions of how to treat some transactions. Typically, they're not going to be quite as good of record keeping and reports. Not always, but often they end up needing some adjustment or some cleanup at year end. You can use bookkeeping software and do it yourself. Now, of course, this is more about patience than time or money. Do you have the patience to learn how to use that software? QuickBooks is the most popular. There's Xero. There's other ones that you can use. In the case of which one should you use, it's kind of like a gym or some exercise equipment or whatever it may be. It's what are you going to use that is the most important. If you're going to buy it and it sits in the corner, whether it be exercise equipment or bookkeeping software, then it's a waste of money, right? So, so whatever you'll use is right for you. If you don't want to use bookkeeping software, but you want to do it yourself, and it's a fairly small business without too many transactions, you can actually, if you went to the trouble and discipline of keeping a separate business account, you can take just those account statements and download them off of your bank site into Excel, and then you can come up with an answer key for one column where for every transaction you put what it was. Was it office expense? Was it subcontractors? Was it materials or supplies? So what were the things that you spent in categories, and then you can data sort it by that column, and then you can total each category. If you're good with formulas in Excel, you can do a sum total of each category number, and that'll give you quickly a profit and loss that you can provide to your tax preparer. You probably do that in a matter of hours, and you don't have to learn bookkeeping software. Then you can also use, if it's a small business, just at year end, you can use an organizer of some sort where you put down what those totals are from an Excel, or if you went and hand added it up, some people still do that, but you want to know what can I write off, what's the common categories and so forth. Most tax preparers will have some kind of form. Here's ours. To give you an idea of, ours is on our website and under annual accounting information and organizers under knowledge sharing. So let's look at the Schedule C for self-employed income. So you can see here it's going to ask for your total income, which may include 1099s or it could be cash sales, but either way it's your total income. It's got stuff for home office here, which is you don't need to spend that, make your home payments or anything out of your business account. These are approximations based on square footage. We'll use some expenses. The same goes for car mileage. The rest of these are common business expenses. So you could look through this to get an idea of common expense titles and names. All right, so those are the different ways of summarizing your potential income and expenses. Keep it all in one account. You can use an accounting firm, a bookkeeper. If you do it yourself, you can use bookkeeping software, maybe use some other spreadsheet way or summarizer way of coming together. I hope this video is helpful. You can look for additional videos that we'll be posting on, do I need an LLC? Do I really need an accountant or tax preparer? Or do I need to make quarterly estimated tax payments? These are all common questions from a newly self-employed person, but I hope this is giving you some good ideas of how to know what to deduct and how to organize it and summarize it. Thank you.